Hey everybody, it's Chris with Life 180, and I am here with Cole Snell from Child Millionaire and Life Tech, and it's going to be a fun one. Thanks for being here, Cole.
My pleasure,
Yeah, man.
as always.
Yeah, this is I love this. I love these segments. So guys, today we're going to talk about the importance of insuring children. I think it's with everything that's going on, this is a real passion point for both Cole and I. We've talked about this a lot in the sense that there's a lot of uncertainty in the world. There's political uncertainty. There's concerns about in the US that I know Cole's in Canada, so I can't speak for Canadians, but there's a
Yes, you
lot
can.
of there's a lot of uncertainty when it comes to the value of the dollar, with taxes, with politics, like just what's going on, the direction of our country. I think all the unfunded liabilities and the national debt and everything that's going on. I think we're really coming into a time where the growing divide between the wealthy, the middle class is getting bigger and bigger. It's becoming more and more so the haves and the have-nots of the world. And, a lot of people are feeling like it's a little too late for them. And so parents and grandparents, a lot of people, when they feel like there's not much they can do, well, there is something they can do. And I'm a big believer that it's our responsibility to leave the world better than what we inherited. And, this is just this philosophy, this concept, the idea, the thought process that Cole and I are going to kind of talk through today is just the concept of really taking that kind of biblical principle of, it's our job to push it forward, push the world forward and leave it better for the next generation than what we inherited. And that's what this concept is all about. And if I were to tell you that there's a way that you could guarantee that you could leave your kid, your child, your children with a better lifestyle, a better standard of living, more security, more opportunity in their life, like my guess is most parents would say, okay, what do I have to do that if you could guarantee that you could accomplish that for me? And I know that because I've had a lot of conversations with people that people instantly perk up, when they're like, oh my gosh, you could show me how to help my family and change the direction and the legacy of my life. Like I know me, I know what I'm trying to accomplish in this world and this life. And, in the years that I have with what I have to work for, but I know that's not even the most important thing to me anymore. Like as soon as I have kids, and it's a weird thing, but I got 3 kids, and all I think about now every single day, honestly, every single day on some level, at some point in time during the day, I always am thinking about what can I do for my 2 daughters and my son, and how can I help them, be prepared for the most opportunity. My oldest daughter is 9 years old now, and I'm like, okay, I got a decade to get her where I want, to be, to give the opportunity so she can take the growth that I have. Cause I grew up, my mom was a postal worker, worked as a mail sorter, and my dad was a truck driver. Right. And so like, I look at like the catapult forward. My wife's dad grew up in a house in the Northeast Kingdom of Vermont, with a dirt floor. Like that's it. And he grew to where he was. And we've kind of taken that and built on it. And so like, I look at that as a responsibility, like the people that came before us have helped kind of pave the path to get us where we are. And like, what can we do to like make it a nice new shiny paved road and make it smooth sailing for them? And not that there's, I'm a big believer, you can't just give everything to everybody. You don't want to make it too easy on your kids, but if you could set up a system that enabled them to succeed, they're going to have to take risks. They're going to have to work their butt off still, but they at least have an opportunity. So anyway, that's my long intro.
That is a powerful intro right there. And I love that you're talking about your kids, and your 9-year-old, you have 10 years to set her up for success. And what is $1 a day? What is $2? What does a coffee a day mean to the trajectory of her life moving forward as she enters into adulthood?
Yeah,
And
man.
and that's a big problem that we have right now, is the difference between financial literacy and financial stewardship.
Mm.
Financial literacy has gotten us to this place today. Financial stewardship is the baton that we want to be able to pass to our children. And so the stewardship piece is about a conversation around the family table about what mom and dad or grandma and grandpa are doing for you by sacrificing a Starbucks a day, $2 or $3 a day, going into a whole life policy properly designed for the stewardship of that child moving forward. I mean, you've heard my "if I were president" speech probably 100 times by now, but I'll give it again.
Do it again.
Because I'm running for president on this stand.
Everybody right now.
Right now, I'm running for president. Even though I'm Canadian, I'm still running for president. Because this stand is so good. They may just let me run the world on what I'm about to tell you right now. But here's what I would do. Right? I'm taking over the world on this simple strategy. As president, I am going to stand at every maternity ward in the United States, in the world, and I'm going to hand out a birth certificate for your newborn and a certificate that when they turn 15 days old, we're going to march them down with that certificate to the local whole life insurance company, and we're going to get them a policy. And that policy is going to be for the price of $2 a day. And let's see what happens to their life when they're 20 years old, because of the conversations that happen in the home during that time, and because of what you're able to do with that cash value leveraged in their adult years. And then when they expire and graduate from this earth, what is the death benefit tied to your smart behavior and me forcing you to do this as president? I will be bronzed. I'll have a statue. This is the guy that stopped consumer debt and fear of money.
That's awesome.
It'll never happen.
Well, it's like, imagine if they take like a latte, the cost of a latte at Starbucks. I mean, what people could do, like,
right?
A large Dunkin' Donuts now in the United States is like $3.50.
Okay.
Large iced coffee, so
like $3.50 a day. Like, we run these numbers and we know what these numbers are. Like $3.50 a day for 20 years can guarantee through just by making your premium payments over, again, 20 years, your kid will be a millionaire. Your kid will retire a millionaire.
Yeah.
So that's you can bank on that. It's pretty hard to screw that up. You just got to make your premium payments.
True.
And be a steward of the message.
Love it, man. Yeah. I mean, it's one of those things, like, people don't think about it, but we all just react and go through life. And I mean, I shouldn't say we all, but I think we all do it to a certain level where we're
sure
go through, and I'm victim and guilty of it as much as anybody else, where you think about it, you just kind of go through and you wake up and you do your thing. I wake up, I get ready, I get my kids to school, and I go, I'm going to Dunkin' Donuts, or I'm going to Starbucks. I just need coffee fix. I need this, I need that. And it's like, that's okay if you have enough cash flow to do it. And there's a lifestyle component to it. And that's all fine and good. And I'm not like banging on anybody for going to Starbucks and getting your coffee, but it's just a perspective. If you have to choose one or the other, which a lot of people do, and if you really want to get yourself to a place and get your family to a place, it's really being intentional about how are you doing things. And so I really want to encourage people to not to stop doing that, but to just think, like, is it worth it? Is like, what is the opportunity cost of this thing? Like, if you start to think about life as not just like, I'm buying this coffee for $5. I'm just going to use $5 as a round number. I'm buying this latte for $5. That's more accurate. It's not just that $5, because as soon as I spend that $5, I don't just lose control of that $5. I lose control of that $5, and every dollar that $5 could earn me and my kids for the rest of not only my life and their life, but actually my grandkids and my great grandkids' life, and the perpetual ripple effect that goes with that. Because if you put it into a whole life contract, you're not just giving it, into control for your kids, but you're creating a financial system that is in place that will be duplicated, because it's going to work so well for your kids. They're going to duplicate it, and you're going to leave, at minimum, even if your kids don't do it, at minimum, you're going to leave a legacy, not just for your kids, but the grandkids. And there's no other financial strategy around where you can knock out 2 generations worth of legacy planning with $1. And
imagine, so when you go to the drive-through and you're ready to buy your $5 coffee, your $3 coffee, you're making a decision, consciously or subconsciously, that coffee is more important to me at this point in time than my dollars. I'm willing to lose control of my money to have control of that coffee. The strategy that we're talking about right now, really, and you pointed out opportunity cost, it takes that opportunity cost out of it, really. Yeah. What's the opportunity of losing control of those dollars and control of that coffee? Well, it's a significant opportunity cost that you're really participating in right there. Yep. So with this strategy here, technically, you could be not losing control of those dollars and gaining control of that coffee. You're really using those dollars 2 times. You're remaining in control of it, and you're getting the coffee that you so desire.
Can you do me? Okay, so guys, we weren't going to go here, but Cole, can you do me a favor and pull your screen and like pull up the Child Millionaire tool and just run through like a $200 a month example for me?
Yeah, sure.
$150 a month example. So guys, I'll say this. I'm going to give a little sales pitch for Cole. I wasn't going to do this, but I feel like compelled to do this now. So everybody who's been watching my channel knows that I'm now the chief marketing officer for a company called Everyday Wealth. And one of the things that we've done is we've partnered with Cole and Life Tech and Child Millionaire. And we are offering this tool to our agents, the agents that come work with the IMO at like in a way that nobody else is able to do. Especially in the United States, because Cole is it's a Canadian company, but they're coming into the United States, and we're kind of helping lead that charge because of the fact that I'm so passionate about this conversation and helping people understand it. And as advisors, having this conversation is amazing because people are willing to do for their kids what they're not willing to do for themselves. And the reality is, you know, if you're looking to have a conversation with parents about understanding the concepts and the power of permanent life insurance when leveraged properly and when structured properly, you know, it's kind of one of those things where, you know, this allows you to, sorry, I'm getting the settings set up for you. There you go. You can share. But this allows you to be able to have a conversation with them to say, hey, what if I could show you a way you could get your kids in this position, right? Like get them set up and taken care of. What that does is it opens their perspective as somebody you're trying to work with to learn the principles. If they were shut down and shut off and not willing to talk about it, this it puts you in a position where, you know, they're going to listen to what you have to say to learn about the kids. And then what happens is you go through that journey is they go, whoa, if this worked for my kid like that, the principles don't change. How would this look like in my life? Like, I know I don't have as much time for compounding and stuff like that. I'm older, but what would this look like in my life? So anyway, he's got the tool up. So talk to me, man.
Yeah, Chris, and I love that, man. I mean, like if I was, you know, money hungry, I wouldn't be building these kind of tools. This is an actual way to have your cake and eat it too. I mean, for all you advisors out there watching this and you want to show up different, this is how you show up in this day and age. This is how you show up, being bang for your buck. If you want to actually offer value is a two-way street. It's add or extract. As an advisor, you're showing up, and if you're not adding value, I promise you, you're extracting value by sucking out people's time and confusing them more about a problem they're already confused about, which is their money. So, you know, through the lens of a child, parents will do what they will not do for themselves. And so if you can appeal to them, you can build your business so effectively and so strategically by appealing to them and hitting them where it matters most, which I promise you is their kids. I know Chris and I are both parents, and we can relate to that. So yeah, so let's look at a price of a coffee a day. So you take this little slider down here, and I mean, this is not a sales pitch as much as it probably looks like one. This is public service, like straight up. I mean, I'll sell you all day on like high net worth tools and things that we do, but this is not that. So you go down, let's go age 0. So 15 days old and healthy. We know that. And let's go down to, you know, the price of a coffee a day. That's, you know, it's $200 a month.
Yeah.
Right. And already you're at age 20, and that's, so you highlight here, that's 20 years. Your total contribution, $48,000 over 20 years. That's pretty manageable stuff. And here's the key thing you have to remember is that the parent or the grandparent, whoever owns this policy, what you're also doing, you're paving a way for your child's future or your grandchild's future, but you're also creating an emergency fund for yourself. So if it ever hits the wall and you're up against it and you need access to this cash, that's your cash. It doesn't have to go to your children.
One of the things I want to add in here, just because it's an area I used to own, a college planning company that was a big passion space for mine for a period of time when I was working with the company that I was with. When I did a webinar actually for Life 180 like 6 years ago, maybe 5 years ago, whatever. But it was called Save on College, not for college. And the idea here is a lot of people think that the way to save and plan for college and, you know, save for your kids' education is to put it into a 529 account, right? And because all the tax deferred benefits, the tax benefits to, if you pull it out, you get access to it tax-free for college. But the bottom line is, like right now in the United States, these $60,000 tuitions are absurd. That people are, paying $60K a year for college tuition to get out and make 30 grand a year for a salary, or 40 grand a year for a salary. It's completely ridiculous. So what people don't realize is that the sticker price rates at colleges only come into account if you have what they call, the expected family contribution to meet those marks, right? Because nobody needs to pay sticker price. Almost, if your kids are decent enough students and you have your money saved in the right way, then the sticker price, your expected family contribution, gets reduced, and the sticker price for the college comes down. So by having your money in a whole life contract like this, like, it doesn't show up on the FAFSA, and you don't have to report it as an asset. Every dollar that goes into your 529, you have to report. So it increases the amount of money you actually have to pay for college. That's so important to understand. By having it in a whole life contract, you get to reduce the amount of money that you kind of show the colleges and show the federal government when you fill out the FAFSA. And therefore, your expected family contribution is reduced drastically depending on how much money and where you have all your money saved. And so remember, there's a 2-year look back period. So as long as you're at least 24 months out from dealing with college, there are different things and strategies. And obviously, the more time you have before college for your kids, the more flexible it can be. But I would say anything more than 24 months, this is a strategy people have to look at. So go ahead. Sorry, I just had to go there.
No, that was so good, man. That was gold. I mean, when you option A, option B, whole life insurance versus 529, you can get really granular on the math.
Yeah.
And it's hard not to see it. Once you see it, you can't unsee it.
Right.
So,
it's the truth.
Yeah. It's pretty amazing. I mean, but then we get caught up in the whole idea, and maybe just talk to this, Chris, if you could. I mean, I'd love to get your opinion.
Yeah.
People, the biggest thing that we're at a stage right now with whole life insurance as an asset class, where people are like, well, if it's too good to be true, and if it was so good, why are more people not doing it? Right. This whole thing. I mean, we get that all the time. It's just we're just at a time and a place where, this is the fastest growing financial strategy right now in the marketplace.
Yeah. I mean, I think it is for a lot of reasons. So we could talk about children, we could talk about adults. It all comes down to control. Caleb and I at Better Wealth talk about control a lot, and it comes down to the idea of controlling your money. So let's think about the alternatives. I don't know about you, but my daughter's 9. I don't even know, A, if I want her to go to college. I don't know, B, if it's going to be worth it. I don't know, C, what the financial system is going to look like in a decade when she hits college, right? So to me, if I were to take, let's look at these two strategies. I could put my money in a 529 account. What am I doing? Am I getting tax deferred benefits on that? Yeah. Will I have tax-free access to it? Maybe. Like right now, yeah. But guess what? That 529 is government controlled, right? Does the government have the ability to change how the tax code works with the 529 account in the next 10 years? Absolutely. Will they? I don't know. They may. I don't control that. Can they change it in the whole life? No, they can't. I guess they could, but they haven't in 170 years. And like, the reality is, if you think about the fact that like most of Congress and most of the lobbyists and most of like the elite people in this world have their money in whole life contracts, there's an incentivization for them not to mess with the tax code.
Yeah, the upper 1%, they all own this, and ridiculous. A lot of it.
I got a phone call from Barry Dyke, the guy who wrote Pirates from Manhattan. And we talked, and he actually just sent me his book. After our conversation, good. And he wrote a really cool note to me, and it was a lot of fun. And but we were talking about a lot about the corruption and of the government, and the hypocrisy of the government and banks and corporations and all these people and banks that are that make their money by selling investments and managing your money and all this, but then. Like, I think he used JP Morgan as an example. Don't hold me to that. I think that was the example though, where he said JP Morgan, literally, he just found out, and he's doing a 2.0 version of this book that's going to come out later this year. So be looking out for it. It's amazing. But he said JP Morgan makes about 70% of their revenue managing investments, but for their own pension plans that they have for their own executive team, not a penny of it, not 0% of their money for their own company pensions are in the stock market, 100% of it is in fixed products, annuities, and whole life insurance.
BOLI.
It's insanity, you know?
Boli.
The crazy part is you can take this, like the beautiful part is this, is that you could take, if your kid or you had this for your life, you could take your whole life insurance and you can 1035 exchange that whole life into an annuity at any point in time on a tax favored basis. And you can then turn this accumulation liquid vehicle that gives you a lot of flexibility. You can do real estate, business, all these different things with it. And then when you hit retirement and you need to turn it, kind of turn it into an income stream, if you're not doing real estate cash flow and all that stuff, or if you just say, hey, I don't want to deal with being a landlord or managing or thinking about all these moving parts or whatever, like I get it. You can flip it and you can turn it into an annuity and create a guaranteed personal pension for yourself, like all these other companies are doing for their executives. I mean, the executive at I think it was GE. I was reading actually in this book last night when he was let go, given a nice golden parachute as part of his program. He had a whole life policy that they converted into an annuity on a tax favored basis, and it kicked out $3.53 million a year of income for him on a guaranteed basis for the rest of his life. It's disgusting.
Parents out there, right? Grandparents out there, advisors out there. So BOLI, bank-owned life insurance, it's the number one asset on any balance sheet on any bank. If they're doing it, and the richest companies in the world are banks, you can behave just like that. You can do the exact same thing, and here's the thing, you don't need to be rich. Why are more people not doing it? It's too good to be true. It's not. People are doing it. The rich people are doing it. Well, I'm not rich. I can't do it. Yes, you can. $50 a month, $200 a month, the price of a coffee a day. You can behave just like Wells Fargo. And
it's going to be at a different scale,
a different scale, but you can still behave like that. And you can start to implement. So if you think about what happens at a bank with bank-owned life insurance, for example, I mean, Chris just basically broke it down. It's really, really interesting. So they insure key people in their corporation. Mm-hmm. The cash values the bank uses, and then what do they do? What do banks do? They lend out the cash value tied to that person's life. Now, when that person passes away, whether they're working at the bank or not, they could be fired, they could retire, what have you. There's a large death benefit being paid back to the owner and the beneficiary in this case, which is the bank. So if you think about how you're 10 or 20 or 30 or 40xing your money by owning this asset, you're right. You can behave the exact same way for your kid as a parent. You can do the exact same thing that I just described that the bank does for their key employees. You can do for your child. Is a child a key person in your life, and would you like to treat them as such? And that's,
I would just say, do you want more for your kid than you had for yourself? I think if the answer is yes, then this is a no-brainer. If the answer is no, well, then call me and we need to have a conversation.
That's a whole different conversation.
I don't know, or if the answer is yes and you just don't believe this, call me and tell me your plan and tell me how it's going to beat this and how it's going to fulfill every different need, that the child is going to have in their life. And I promise you, I'm going to beat you. I've looked around. I've done all this stuff, and there's nothing that can compete or compare to this. And so, that's the power of leveraging whole life insurance. So when you see this, it's not just about the numbers. I mean, if you look at the screen, you can see, okay, age 20, you got 54 grand. Honestly, there's a chance it gets better than that. These
are all -5 numbers. So I mean, it could be way better.
Probably really conservative assumptions. And this doesn't account for the fact that, listen, at age 20, let's imagine you use it for college. Let's imagine there's no age 30 in there, but imagine at age 30, well, don't you have a house? If you use it for investments or if you use it for a house? Yeah. Show me what does it look like if somebody at age 30 wanted to use it? Can you show at age 30?
Yeah. Did my screen switch to family home?
Yeah, it's there. Yeah.
Yep. So let's do that.
Yeah, there it is. It's age
30.
So
we got age 30.
Yep.
And so age 30, you want to, there's a little house toggle over here. You click on the house toggle.
Love it.
And so people want to buy a house. So that's kind of a milestone thing to do, is buy a house at age 30. So this top slider here, you've been contributing $200 a month. Say you want to buy a house for $350,000. Well, let's say that's not going to buy you a house. So you're maybe Maybe you want to buy a house for 550,000. Maybe that's more realistic. Starter home, condo, what have you. What do you want to put down? 10%? Well, maybe in mom and dad's eyes or grandparents' eyes or the buyer, the 30-year-old's eyes, 20% makes more sense. Probably does. Well, sure. At that current contribution level of $200 and you got 77,000 available through a policy loan and cash value, that you're not going to be able to do it because at 20%, it's going to kick you out. So what you need to do is you got to go back here and you got to up. If the goal is a family home for that child, you got to up. What do you got to go to? $300 a month? Let's see. So that's, there's your latte a day.
Yeah.
Can you get the 20% out of it? Yeah. Bang. You got it. You got 117,000 available in cash value. There's your $110,000 on 20% down of a $550,000 house for a total contribution just over 20 years of 72 grand, by the family, mom, dad, grandparents coming together and finding $300. That's the thing is that your money, this $72,000 is completely liquid at any time, and it's tax advantaged. So at any point in time, if you say this, you're not locked in to this strategy in any way, shape or form.
Yeah. That's why we call it the and asset, guys, because
that's it.
It's the and like you're saving this. This is a banking replacement. It's a banking alternative. And we call it the and asset because it just is a place instead of a savings vehicle that you can put and get the same, actually, I would say better guarantees and better opportunity than the savings vehicle. And you're getting your dollars to do more than just one thing, grow, for you, more than just grow for you. And in a savings account, let's face it, you're not even going to beat inflation, right? So this is going to be an inflation beating savings account. It's going to get you better guarantees. It's going to get you ancillary benefits, and it's going to give you liquidity of the money that you can use for other investments without interrupting the compounding of your money.
Yeah. And I mean, the crazy thing, like if I just flip through this really fast, if you look at say the first 1, 2, 3, 4 toggles, really simply put, by using what Chris just talked about, which is the and asset strategy, by using that same dollar 1, 2, 3, 4 times. If you look really quickly at, say this case, we're illustrating $300 a month for 20 years. So $72,000 all in. Let's look at age 70 as retirement for the child. So what's that number in here? I don't know. Let's just call it, say 900 grand, say, or 800 grand, whatever. And what you can actually do through taking policy loans. Okay. Now that is perfection.
This is early morning video, guys. If you're watching this, it's like literally I woke up at 5:30 to do this video today because he's on the East Coast and we just couldn't make the schedules work. So now my daughter is waking up.
I love it. She knew we were she knew we were talking about her, about making her a millionaire. I mean, you couldn't time this any better.
Man. I know, right? Say hi, Cole. Hi. Hi, Cole. All right, baby. You go.
I love it. Wow. That's beautiful right there.
This is my baby. This is my littlest. So anyway, good timing, kiddo. Way to go.
Yeah. What's her name?
Kierland.
Kierland?
Yeah. Kierland.
Hi, Kierland. Thanks for making my day. Oh, is that a peace sign? Peace.
She's 2. No, that's her 2. I'm
2. I'm 2. Oh, you're 2.
Yeah.
All right. $200 a month.
Yeah, exactly.
$200 a month.
There we go. All right. So keep going, buddy.
Yeah. So we got, so what you're able to do is you're able to basically, through a series of policy loans, you're able to achieve all of the things I'm about to show you right now with $72,000, $300 a month in, you can do this. So you got 800 grand in the policy. Bam. Here's an investment, whatever it is, self-directed, 926,000 you got at age 70. So age 20 plus 50 years in the game. Here's the family home. There's another $1 million. And then we go income property. Here's passive income. Everyone has the dream of being a landlord. I don't know why, but they do. And here's another $1 million. So like literally for 72,000, you go $1 million plus 922,000. Let's just call it 2 million, another $1 million, 3 million, plus the life insurance contract in here. There's another, 800,000. That's almost 400. That's almost $4 million. You can literally achieve this through and asset thinking and asset strategy. I mean, read Caleb's book and you'll learn, simply put, how to take $72,000 and turn it into 4 million for your child. And I mean, and then if you go down here and you think about legacy, we're not even really talking about death benefit in any of this stuff. At age 70, you're right in here, age 75, you got to, and you're not going to graduate at age 75. I mean, kids born today, if everything goes as planned, they're living to be 90 to 100. And this number goes up exponentially after this. It really starts to pound, after age 75. I mean, you're already leaving your grandchildren with a giant nest egg, and not only just the nest egg, but the stewardship that goes along with the nest egg, the conversation that's happening around the conversation you're having with Kierland, about, why daddy's not getting a venti orange mocha frappuccino. Sorry, that was a Zoolander quote.
Well, yeah, exactly.
Yeah. Today.
So
right? Why daddy's not going Zoolander on Starbucks today?
I know, right? The crazy part is, the cool part is, like, the parent, the grandparent, whatever, you do it for the first 20 years or first 22 years or 24 years, however long it takes. And then when they graduate from college, you graduate them with this policy, right? And you give it to them.
Yeah.
Now they have a savings account on steroids that they can leverage, that they can use. And it's pretty powerful, right? Because now you're basically gifting your kids or grandkids, when they graduate and start their adult life, a savings vehicle that they can have all these benefits and the guaranteed growth. And no matter what the economic environment is, it's going to be an account that's going to be guaranteed to beat inflation. It's going to be guaranteed to, every dollar in, because there's an expense of these things, right? Like at the very beginning, to take part, to participate in the system, there's an expense to get started. And that expense is very front loaded. But if you can endure that expense for the first 5 to 7 years, there's no more efficient place to put a dollar after that period of time. You've paid your dues. And so now you're gifting this to your kids, to, like, every dollar they save, that they can, pump into this thing. It's going to be the most efficient vehicle that they're ever going to.
You just highlighted something so important. I mean, people think that these policies are so rigid. They're super flexible.
Yeah.
They're way more flexible than people think. And you just said it. I mean, if you can stomach it for 5 to 7 years, and you don't even, in this case, what are we doing? $300 a month right now? Yeah. You don't even need to do the $300 a month. There's a lot of flexibility that you have built into this. If you have a good advisor that can kind of coach you through, if you have a good month or a bad month, you don't need to actually make the 300. You got to do just the NC, net cost of pure insurance. And you don't have to put the paid up in. You should, but I mean, that's a whole other kind of granular conversation. But, and what this toggle here does is it talks about what you just said, which is at age 20. So now age 20 up here, these are the values. And age 20, this is the stewardship. Age 20, you pass the baton to Kierland. You say, okay, Kierland, you say to your baby, you say, here you go. You're 20. You learned about this. What do you want to do? What's your options? Well, hey, Dad, you know what? I love what you're doing for our family. I'm going to go ahead and I'm going to continue to make contributions to the policy myself. Now, this is a 20-year-old right down here at age 20. Do I want to do $50 a month? They can choose if they want to do $100 a month into their own system now. They own this now. The 75, they can go up to $300 a month is what they can go up to. So now what they're doing to their legacy at age 75 is they're basically turning $1 million into $2 million.
Fantastic. And that's pretty much, I mean, I won't say guaranteed basis, but like if the company keeps paying dividends like they have for 170 years, then that's guaranteed pretty much, especially at the low dividend rate we're in right now. I think it could actually be better than that, because eventually interest rates will have to go up and dividends will go back up, and we'll have an upswing. Sorry, my daughter's still in here banging her head.
Yeah, no, that's perfect.
Yeah, I know, right? So I mean, it's really amazing, guys. So if anybody has any questions about any of this, like the Child Millionaire stuff, we have a team that Cole is training in the United States. If you're in Canada, reach out to Cole directly. If you're in the United States, reach out to me. I have a team of people that I'm coaching, that Cole is coaching on the Child Millionaire stuff. And call me. I can connect you, because I can't sell. I'm not licensed, but I just do all the training and coaching now. So I can connect you with a certified, Child Millionaire person. Is that a thing?
We like you. We like you
certified?
Not licensed.
I mean,
it's better having you not licensed. You're better for our industry not licensed.
It's very hard, man.
You can push the envelope, brother.
I get tempted to get my license every single day, because I get all these people that call me and
come to the dark side.
I've got $1 million that I want to do this with, and I'm like, oh man, I just walked over like $50,000 of commission. but it's the right thing to do, I think, for where I am. So
We appreciate your service.
thanks, man. Yeah. So that's it, man. I appreciate the time again, guys. If you found value in this, go ahead and smash that like button. You know, it really helps the channel. YouTube loves it. It shows that, you know, that you appreciate the content, and it helps YouTube and the algorithm get it to more people. The higher the percentage of likes, the more YouTube will share this information. I think this video specifically is something that every parent should be able to see. You know, every grandparent that's thinking about this stuff should be able to see. So if you haven't already, please hit that like button. Would really appreciate it. And make sure also, if you haven't already, subscribe, hit the bell. That way you get notified every single time I launch a new video. And that's it, guys. Go out, have a blessed, inspirational day. I'm going to get my day started now that I got to get my kids to school, and we'll go there. Cole, thanks so much, man. We'll do this obviously again here pretty soon, but have an amazing one, man.